And that means we're now live here on our YouTube channel. It's our daily show we call the Halftime Report. We go through the markets one step at a time, breaking down the news, taking a look at all the charts, giving you guys some technical analysis, some insight into what's happening in earnings season. Pretty much anything that we think is important, relevant, and interesting. We analyze it all for you guys out there at Tackle Trading. And welcome back to our show. Monday morning, 10/18/2021. We're starting off a busy week of earnings season. I was talking to Coach Matt earlier today, and there's representation from almost every single sector in the market that's going to have an important company report this week. Started this morning with a couple of smaller names. Albertson's one of them that did report here today. But all in all, we've got a technically driven market. We've got an earnings driven market. We got a busy week in front of us. So let's get right down to it. Coach Matt is joining me here today. How you doing today, sir?
Tim, doing fantastic. Excited to be here with the team to break down the market action today and take a look at earnings so far and kind of prepare people for the week this week at Tackle Trading from a market perspective.
Price response on Wednesday, Thursday, and Friday was very, very bullish, Matt. In fact, even the price response here at the open today was a nice little bullish move to the upside. It was fading a little bit pre-market and all that kind of thing. How have you, before we get into the detail of technicals right now, how have you seen the earnings season up to this point? I know we're very early into it. We got a bunch of banks last week, Goldman Sachs, JP Morgan, those types. What is your read on it so far?
Well, let's take a look at the broad market and let's look at it from a price response first and foremost. Again, Tim.
Got to have the epic pen.
Tim. I mean,
Where is the epic pen?
We got to get going. We got to get prepared here. This is your earnings response so far to earnings season. So from a technical perspective, obviously the market has started to shore up a little bit. The reversal analysis that we've been going through as market participants and here at Tackle Trading over the last couple of weeks has been very consistent. From an intraday perspective to a daily perspective, you gotta really, especially in the back of the last month, you gotta appreciate the consistency that earnings season has had so far. Mm-hmm. Now, again, we are extremely early in earnings season, extremely early. Only 8% of companies have reported earnings so far, and obviously that was led by a vast majority of the banks last week. And 8% is obviously S&P 500 companies. And so and by the way, if you guys haven't or have not used FactSet in the past, mm-hmm. FactSet is one of the best earnings sites and helps you understand earnings. And I love it because it's a lot just raw data. We can formulate our own opinions. Give us the data. Right. And so a lot of these numbers do come from FactSet. And quite frankly, most financial numbers you get from earnings around there, Yahoo Finance, CNBC, wherever they come from, typically do pull from FactSet as well. And so when you're looking at 8% of companies reporting earnings so far, you have 80% of companies beating the EPS number. You have right about 83% of companies beating the revenue numbers. Now, just to give a little bit of context, 80% and 83% are well above 5-year averages, okay? Mm-hmm. Well above 5-year averages. But we really don't care what transpired 5, 4, 3, even 2 years ago. We're really looking at the backdrop of the last 2 earnings reports or earnings seasons, which have been historically good, where you had 85, 86, 87% of companies beating. So I do see the market behaving a lot better than the actual results have been so far, quite frankly, especially in comparison to the last 2 quarters. But you got to give this a good start to earnings when you combine the technical response since earnings has started last week to the actual raw numbers. 80 and 83% of companies beating earnings. Those are pretty decent numbers. In fact, 83% on revenue would be the 3rd highest earnings results since FactSet started assessing this back in 2008. And so obviously they're a little bit positive. The number we want to keep an eye on right now, though, is what's called blended earnings. And what blended earnings is, you take into account the 8% of companies that have reported so far, the 92% of companies that have not reported so far from an estimate perspective. So we have the actual result of 8% of companies. We do not have the actual result of 92% of companies, but we do have those estimations because, again, we're talking about S&P 500 companies. Mm-hmm. Right now, that blended growth stands at 30%. And that's a number I talked about both. If you recall the podcast we did a few weeks ago on earnings expectation, I talked about that 30% number. That's a metric we're watching here. We came in, we started earnings season last week right there at about 27.5%. Given the beats and the gravity of the beats, especially a little bit on the backs of Goldman Sachs on Friday, given the magnitude of the beats, we are actually better than we were last week at 27.5. This is one of the reasons the market is solidifying itself a little bit. We're coming in right now at 30% blended growth. Can we maintain that type of number as we start getting into more sectors that don't typically have a tendency to have the beats that say, come on, let's just be real. Who here was expecting Goldman Sachs to actually knock it out of the park?
We all knew they were going to crush
Everybody
it.
was,
Yep.
right? Okay. Dow Chemical reporting out of basic materials is a little different story, right? When you're looking at the technology companies reporting this week, Intel, IBM, that's a little bit of a different story. When you're talking a little bit about the energy components, actually, I'm not even going to say that. I think energy is going to come in strong.
I think energy is going to do well, yeah.
Yeah, I think energy is going to come in strong. But you also start trickling in a little consumer staples like Procter & Gamble and Philip Morris. You start getting into CCI and real estate. You get a little bit of a utility response here that don't typically have beats like that. And so you got to give it if you're going to give it a grade, I would say the grade, if you include the technical response to the start of earnings season, I'd give it a B+ so far. And again, a lot of that is based on coming off the lows, a little bit of an easier bar to overcome than when you're trying to price in at the highs. So I'd give it a B+ so far, but so far a fairly decent start to earnings season. And once again, a couple key numbers to keep an eye on. Number one, I do think EPS numbers in terms of beats at 80%. We routinely started the last two earnings season 87, 88%. Let's see if that can creep up a little bit into the mid 80s. And again, what typically transpires is you start with massive beats and then it kind of comes down a little bit. So we start a little low there. I'd like to see if that gets up a little bit. That's one key number to keep an eye on. Revenue beats are not as important to me personally as EPS beats, but again, starting off at 83%, I think that's a very good number to keep an eye on that one. But it really is that blended EPS growth number that we're looking at. Coming in at 30% right now, according to FactSet. Last week it was at 27.5. We ended last earnings season at 27.5 as well. So a positive start there. But again, technical response, the market is showing you what they think of it, and they think of it as pretty decent so far.
Yeah, B+ is not a bad grade, though. I mean, I think that's a very fair assessment of what's happening out there.
Though.
Yeah.
I got to say it again. It's the banks. It's the banks. It's the banks. They kind of cheat. They get a lot of money from the Fed.
Yeah, yes, they do. There's no doubt about it. 8% of companies have reported so far. By the end of the week, another 55 S&P 500 companies are set to report. A lot of big names this week. It's an interesting week. I know next week.
Can we play the game?
Let's play the game.
Let's play the game. What earnings this week, right? This week. Last week there was a few that were like I was looking at DPZ and we were all looking at Goldman Sachs, JP Morgan, all the banks, right? What about this week? If there's one earnings that you're looking for this week that is important to you for whatever subjective reasons, what would that earnings be?
Netflix in the high base pattern that it's in. I've been wanting to trade it, Matt, to the upside. I've not taken a trade on it because of the earnings right in front of us. We know that Netflix can gap 5, 6, 8, 10% on an earnings report. So,
and just to clarify, when you're saying a trade, you're meaning a directional trade.
I'm looking for a directional breakout.
Yeah, that's what you're talking about. Yeah, just want to clarify.
So the earnings response is going to impact that a bit. I mean, if we gap all the way out or all the way down, I can't really play that. But I'm watching for Netflix, and I'm really interested to see if this momentum can continue. What about you? What would be the one?
Let's stay on Netflix for a second because I'm obviously very interested in Netflix as well, especially on the. On the news today that we saw Netflix is accounting $900 million in revenue from Squid Game.
They're claiming that Squid Game has brought in $900 million.
Allegedly, since they don't disclose the metrics of how that got to $900 million. But think about Squid Game for a second. If it was a movie, and this movie cost $21 million to make, and it cashed in over $900 million. Now, again, I don't believe the $900 million number. I'd like to see the metrics.
Mhm.
But let's just say that occurred. How much would we be geeking out today on theaters?
We would be losing it.
How much would we be geeking out
We'd spend
on
20 or 30
Disney or Universal or whatever the firm
Mhm.
was that put it out there? It's an impressive number is my point. Let's see the earnings numbers and let's see some of that data though, because Netflix is one of those companies that can absolutely fly on earnings,
Mhm.
can be a market mover, no doubt about that, is the leader in the streaming space, 100%, which is one of the biggest growth areas of the market. And you're also talking about a stock that's up close to 20% in the quarter.
Mhm.
It's priced to fly. You got to produce results here.
They're going to have to come out and smash
You have
it.
to produce results here. And so Netflix is obviously going to have every market eye on it, no doubt about that. So I'm obviously looking for them as well. I mean, in the tech space, Tim, you got, like I said, you got Big Blue that's, stuck in, not Big Blue. They're all Big Blue. Intel and IBM, they're now both Big Blue. Like seriously, I think of them both similar. But IBM's had a little bit of a reversal analysis in recent history. Has been a little bit of a leader over the course of the last month in the technology space. And you're kissing against a pretty important resistance zone right there at 150. So I do think IBM, more than Intel this week, I do think IBM in the tech space is going to be important. You talked about Netflix, but if you're looking at communications this week, I do think you got to talk a little bit about the recent just absolutely get destroyed type stocks in Verizon reporting this week. Can they reverse this momentum downtrend? AT&T also doing the same number. Can they reverse that momentum downtrend? That's going to be important. When you're looking at consumer discretionary here, consumer discretionary broke out of that long-term channel. I mean, we kept those ratings pretty tight to tackle on discretionary for a while, preparing for this breakout. You got to love the breakout in discretionary. But again, you're talking about a week where in the discretionary space, you got the big dog of them all. And who didn't love? Oh, and by the way, what I say? 800, 850. And once it gets above 850, what did I say? It can get to 9. Didn't I say that? I think I said that, right?
It is barreling towards
I
it
said
too.
I did say 850 before earnings, but if it gets above 850, don't act like Tesla can't get to 9. Well, Tesla's leading the charge here. They report when you're looking at discretionary, Burrito Company, and yes, that's all I'm going to give them. Burrito Company, Chipotle. They report earnings showing a little bit of weakness against the sector, and they can't get their sector is taking off here. They can't get out of the mud here. Mm-hmm. Can earnings get them to fire off here? When you're looking at basic materials, one I'm looking at, and I think a lot at Tackle Trading are that's an important part of a lot of people's portfolio is FCX. Mm-hmm. Obviously, the leader in the copper space, the copper proxy that we all know and love, cash flow darling. On it's seemingly one of our yearly reports, either the Tackle 25 or
dividend
fireworks, or even dirty sexy money. It can be sometimes. That's why it's one of those cash flow darlings. It's fired off recently, and you gotta love it. But can it continue? That's a question I have for XLB here. Your energy components this week. A couple ones to keep an eye on. Schlumberger been doing amazing things lately, but so has practically everything in the energy space. Can that continue the recent momentum in the trends? When you're looking at the industrial space here, Tim, and again, this week in earnings is not next week in earnings. Next week in earnings is big dogs, and
Apple,
a lot
Microsoft,
of them,
Google,
right? Yeah. Okay, and then the week after, 150 S&P 500 companies. Mm-hmm. You only have north of 50 this week. But in that north of 50 reporting this week, which is slightly more than 10% of the S&P 500, there are some very important names. And it's almost like there's one or two names per sector that are going to be very important. For example, industrial. When you're looking at this sector recently, reversal, double bottom, double top, recent breakout from a sector perspective, you got to like that. Can that continue? Can Honeywell, reporting this week, confirm a reversal again on a positive catalyst called earnings? That's something to keep an eye on Honeywell. But it's not just Honeywell this week in the industrial space. It's railroad week. You got your railroads here. UNP, United Pacific's been doing absolutely amazing things. Kansas City Southern, CSX, they all report earnings here. Can they continue? And again, continue. They have a lot of momentum behind their short-term trends. Can they continue this on a positive earnings? And then when you're looking at the financial sector, again, a lot of the big name banks last week. This week, it's more about regional banks this week. So if you're an investor in the regional banks, you do have a bevy of those regional banks coming out this week. But one to keep an eye on outside the regional banks, Juggernaut Credit Company, American Express here, forming a massive resistance channel right south of 180. If you look at that on a weekly chart, American Express is one of those companies that can be very consistent in its trend analysis. Look at that, very consistent trend, very consistent trend, very consistent trend. And those are weekly channels. You put those on daily channels, you see this very consistent long-term trend. Well, over the course of the last couple quarters, it's had a little bit of weakness, but right now you're kissing up against a major resistance zone in American Express. Can earnings, once again, a lot of questions this week on earnings, but that's par for the course when it comes to earnings season. Can they break out of this weekly chart? Can they get some of that financial love that's been happening post some of those financial companies? And then, I could talk about Procter & Gamble and Philip Morris and CCI in real estate, or Nextera in utilities. But this week, and one of the important sectors this week that doesn't get a lot of trader love, but does get a lot of investor love, is healthcare. Healthcare has been one of those sectors that have been under fire recently, very similar to what we've been seeing in technology, similar to what we've been seeing in communications. It's trying to find a bottom right there north of that 200-day moving average. 125 has held support multiple different times. You're starting to see a little bit of double top analysis double top in the healthcare space as well. Can this be a buying opportunity? I think is a very, very relevant question. Look at the weekly chart here. That is, I don't want to call that a textbook bullish retracement because you came a little deeper than a textbook bullish retracement. That's where that volatility really lived. This would have been a textbook. Obviously, the volatility there blew that up. But you got to like the 125 handle on that weekly chart. And again, that 200-day moving average is right south of 125. The 50-day moving average on the weekly chart right south of 125. You're seeing slowing, you're seeing slowing momentum on that weekly channel as well. And then when you're talking about all these other sectors out there, you got one or two big names that are reporting this week that will have an impact, that can move a market, but nothing like healthcare this week. Nothing like healthcare. You have a juggernaut of companies in the healthcare space, very similar to finance last week. You have a little bit of that with healthcare this week. Johnson & Johnson, juggernaut, Johnson & Johnson. They're reporting earnings this week. Danaher, they're reporting earnings this week. Abbott Labs, they're reporting earnings this week. Mega juggernaut, Intuitive Surgical, they're reporting earnings this week. And that's before I get into everybody's favorite Ant-Man Anthem actually, but Ant-Man reporting earnings this week. I'm not done. Biogen reporting earnings this week. And let's just throw a couple of the healthcare plan companies, HCA reporting this week. And so this space has been under fire recently. And so, and everybody knows, everybody at Tackle knows I can be long-winded getting into my point, but I like to get the full analysis out there. I am looking at Netflix as well, Tim. That's the company. FCX very close to that. Tesla extremely close to that. Those three really stand out to me. But again, I'm looking at 1 to 2 per sector. But if I have to answer the question honestly, it's the healthcare space. It's not just one. There is a bevy of very important companies that are reporting in healthcare, and where healthcare is from a weak perspective, that could be a viable opportunity from a value perspective, from a reversal characteristic perspective. It's got to have some follow through and confirm with some price movement on the healthcare space. Got to have that. Got to have that. but it's got an opportunity this week, Tim.
And Johnson & Johnson's an interesting chart heading into an earnings report. It's been under pressure here for a couple of months. You got some bottoming characteristics in a downtrend, obviously been under pressure, but maybe that could jumpstart something, get a little bit of a comeback coming back, something like that. XLV, we did keep rated at the 45-yard marker as it's kind of just stuck down there. We need to have price development, chart development, all that kind of stuff. We'll go through sector analysis here in just a minute, but it's going to be an interesting week of earnings, no doubt about it. We'll cover those reports day by day as they do come out. Matt, on the broad markets, just technically, I mean, the S&P 500 down, NASDAQ, Russell, what are you seeing from a technical standpoint? Because to me, I saw a market that found the 50-day moving average as support here on the intraday and now is up at the highs of the day. I know it's a light range candlestick, but continuation from the last 3 bars. What is your read here?
Yeah, I think you got an accurate read. First test, well, I don't want to say first test, had a little bit of an intraday test at that 50-day moving average on Friday as well. But, it was interesting here today, Tim. First and foremost, you start your analysis always with the backdrop from a technical perspective. I really don't need to go through that. Tim, how much time did I spend analyzing this reversal live in the halftime report? Like
every day.
A lot. And not only that, but did a Matt's whiteboard on it, talked about it in a lot of our content. And so I really don't need to go through the entire reversal analysis. Tackle trading community should be fairly familiar with it. So you really got to look at the trend that is starting to build here to the right-hand side. And you're up into this bullish reversal. You're up 4 candles here. The question is, can it continue to move upward? Yeah, and the answer is yes. You're not overextended in any scenario. The intraday action is solidifying itself. You will start getting into some pretty significant chop at right around that 4,500 level. Obviously, top end of resistance right around that 4,550. But the interesting data I want to just quickly discuss from an intraday perspective is, quite frankly, the overnight action from Sunday. Here's Sunday's futures market open, and as you can see, these are the Asian markets, these are the European markets, and both through the Asian timeframes as well as the European timeframes, you didn't really see any like true market volatility. But you did see some fading action here. And what was interesting was really kind of China last night. They came out with their third quarter GDP report, and it came in at I want to say it was 4.9%. So China GDP came in at 4.9%, which was a fairly significant miss given what the expectation was of 5.2%. And so China comes out with a pretty significant miss on GDP. But we don't see, and this is important to me because from a technical perspective, because China's been all over the news recently. I mean, and not a lot of positive, right? Nope. And China right now, when China gets brought up in a conversation between market participants, what's it usually about? Not about, but what's the tone?
The tone is some concern, negativity. Something's
just nothing. Just
something's
no
wrong
China today. Yeah. Just no Chinese news today. Yeah. China, hey, People's Republic of China, like, don't release any information out of any Chinese state-run media. Like, let's just keep it a non-Evergrande day today, right? It's kind of that mentality. Well, here's China coming out yesterday with the GDP at 4.9%. The expectation is 5.2%. There's growth concerns, at least seemingly growth concerns, that have been driving this market down for pretty much the last 4, 5, 6 weeks. A lot of that tied to international growth, and yet we don't see any volatility.
Yeah,
we don't. Yeah. Where's the volatility here?
Yeah, I thought you would have got selling on that Chinese.
Where's the sell here? And so I just saw this as a little bit of a negative report that came out, fade action throughout the European hours. But then what transpires? What transpires? Something we've been talking about recently. Look at those cash opens. Look at those cash opens. Once you start seeing the trend develop, the cash open tells you the casino's open for the market participants. What's their thirst? What's their flavor of the month? Well, it's the buy side right now, because that cash open came out right here, right there at 4,400, and the backstop right there on the 50-day moving average. And look at the price response. Market's in a buyer's mode. Now, obviously, a lot of news stories, at Tackle Trading, our rankings, we have the S&P ranked at 30. It's a 5-point upgrade from last week. You got to appreciate the step up and the step in the right direction. but we're still in the very beginnings of confirmed trend reversal analysis in the middle of earnings season with a lot of geopolitical situations, and we hypothetically got Santa coming to town. I think there's a lot to get excited about right now. These are the type of moments that do have a tendency to spark a good Santa Claus type season as we come into November and December. You back that on a reversal, having a positive start to earnings, but we got a lot of work to do in front of us from an earnings perspective.
Yeah, it's an interesting market condition that we're starting the week in. Obviously, positive development over the last several bars. The technicals are developing nicely. I did think that Chinese economic data had the potential to drag the market a little bit. Did not. So here we are in the S&P 500. We are healthily moving higher. Here, I got one last question for you on the technicals. Where's my next trigger? Is it 4480 from that?
Well, a trigger from a what perspective, though?
Where's my next resistance?
Oh, that's I already gave it. It's 4,500 by 4,550.
I see. Yeah.
When you say trigger, I'm talking about, you see a swing trade setup where we're going to blast a high base.
Yeah.
No, you're in the middle of a. All right, put it like this.
Mm-hmm.
The standard price movement between pivots is 7 to 10 days on average historically.
Mm-hmm.
Okay, historically. You're in day 4, which is the middle of a historical movement. There's not a new trigger. The trigger's already occurred. It's about the continuation on an intraday perspective. So for me, there's obviously, this is a market at this point. You see a trade, you take the trade in my opinion, right? But from a market perspective, I don't see a new setup here. The reversal got confirmed last Thursday, continuation against the reversal on Friday. Now you're in the middle of a price movement back to the top side. I think it fits very nicely with the 4,500 type resistance level. We'll see how 4,500 behaves. Now, is there other levels that I could identify to keep an eye on? Yeah, but they're all other forms of analysis that I don't think are very important right now.
Gotcha. And that reflects our 30-yard marker rating. Obviously, the positive developments this week, the increasing trend. That's where we are on the S&P 500. I do want to flash through some of the sector rankings, Matt, if we can. Next. Why don't we start with the aggressive areas of the market? Communications, technology, discretionary. Discretionary, one of the best charts in any of the sectors, in my opinion. Got a nice little upgrade there on the breakout. What are you seeing here in the growth areas of the market?
Well, technology got, let's first start with tech, and growth is tech, discretionary, and comms. When you're talking about technology here, you're looking at a very similar type reversal that the S&P has had. The question, and we were looking at this last week, and the question is, can technology outperform? And wow, did it ever outperform over the last 3 trading days, reclaiming the 50-day moving average, testing the 50 on the buy side, two consecutive days, one on Friday, one also today. I think you got to be very impressed. They did get a 5-point upgrade, putting them into bullish territory. It does look like this. There is some current momentum behind the tech space. Not a lot of trades in the tech space this week, though. Given the fact that there's a lot of big names next week. And again, kind of how our own internal number, right? We're not like Netflix. We actually talk to our community about the metrics that we utilize. Our internal earnings number is 10 trading days. There has to be at least 10 trading days for a swing trade to get on our reports. So there's really not a lot in the tech space, given the fact that you got a lot of tech names reporting next week and the week after. So it's going to be one of those big picture type weeks from a technology perspective. One to keep an eye on, though, is fintech paychecks here, looking at a potential flag-based pattern with the breakout. Nice 120 trigger. You could trigger already. That is something to keep an eye on in the tech space. Comms, it was really, let me go to discretionary, because discretionary got another upgrade last week as well. Discretionary had a 35 ranking last week. We upgraded that to 30 to match in line with the actual S&P 500. I think, and honestly, that was only because it had ran a little too aggressive from a technical perspective. But it doesn't seem like it wants to slow down here. Discretionary on the backs of Tesla, and a lot of it on the backs of Tesla. Seeing a lot of firing off response here in the discretionary space. And we've been talking about this space and the breakout of 185 quite some time over the last few months. been very impressed that discretionary did not get caught up in the growth concerns and the volatility over the last 4 to 5 weeks that say communications did to a large extent, and obviously technology did. So fairly impressed that you never really saw that. But one of the open questions was, can discretionary do this if it doesn't have Amazon supporting some of the price movement? Well, Amazon decided to wake up, get above that 200-day moving average, and just blast off. So you're seeing a lot of bullish movement happening before some very important earnings results coming out of Tesla in a week from now, coming out of Amazon as well. So it's something to keep an eye on. But you got to love the current price momentum that you are seeing in discretionary. Not a lot of trades this week, given the fact that you do have the aforementioned Tesla. You do have Amazon next week, so there's not going to be a lot of active trading going on, but a couple stocks to keep an eye on that made the report. The breakout of 220 on Advanced Auto Parts certainly looks interesting. That made one of the reports. Also, Petco. Who was it? It was Coach Greg last week, wasn't
Correct.
it?
It was his trade of the week.
Greg.
Yeah.
It was his trade of the week. That's right. He was actually talking about this in the rapid fire video. I hope. Hey, Tackle Trading, are you enjoying the rapid fire video we put into the newsletter? And the rapid fire video, guys, for those of you who have not done it, it's basically one of us coaches kind of leads the conversation. They go through the favorite technical setup for the bull and the favorite technical setup for the bear. Well, here's Coach Greg talking about his what do you call them? His furry favorites or
his furry friends or something. I can't
furry
remember.
friends. He's like, my furry friends are going to come through, and he's like, wow, I think the furry friends listen to Coach Greg in the rapid fire video. They are coming through very nicely. You look at that on a weekly chart. We don't have any earnings here. You look at that on a weekly chart, you really don't see any chop until you start getting into the 25 level. So that's something to keep an eye on in the discretionary space. And then lastly, communications, Tim. Unlike discretionary firing off, unlike technology recovering and then some against some of the other counterparts in the market last week, here's communications just cannot find any buyer's love. Now, the selling seems to have subsided, and the selling seems to have subsided as soon as Facebook hit the 200-day moving average. So keep an eye on that. Obviously, earnings is coming up fairly tight on Google, on Facebook, and so on and so forth. We talked about some of those components already that are reporting this week in communications, but it does seem like let me put it like this. I'll probably have the same question for communications next Monday that I have for healthcare this Monday, because you start getting into those. And again, Netflix, a big one this week. I'm not trying to discount that. We've already talked about it though. But when you're talking about the bottoming behavior, you start getting into Google next week. You start getting into Facebook next week, and especially Facebook. A lot of the can't get going here in comms. A lot of that is due to old Facebook, but one to keep an eye on. We haven't talked about a lot in recent history, but it is a Tackle 25 stock. Can Activision, as it reports, as it comes into earnings season, can it start showing a little buyer's love towards the lows on this weekly chart as well? These are open questions I have that should be answered throughout earnings season. But for right now, comms against the rest of the growth areas of the market, with the Facebook type news out there. I mean, with the positive type price action we're seeing in technology, with the lift off galore we're seeing in discretionary. I think those are the two we're looking at from an active trader's perspective. But comms seems like a little bit of a stay away, at least until we start seeing a little bit of the price response from Netflix. And then obviously as we get into next week with Facebook and Google.
And out of all of those, obviously discretionary needed Amazon to really get on board for it to truly have a beautiful potential for a huge trend here. And Amazon had bear stop out day just the other day. Interesting chart there. I know they got earnings in a couple of weeks as well, but it definitely did benefit this chart. And that Tesla chart, I got a question for you on Tesla, because we had Tesla on the reports a couple of weeks ago. You have incredible momentum and strength. Traders could have took that breakout. Got earnings right there, though. Do you just knock down the profit? What would you do in a situation like that if you did play the breakout and you got an earnings rule in like 2 days? Because I have,
It's past target once, scale out and aggressively trail stop on intraday support levels.
yeah, good problem to have on management.
It's a fantastic problem, but yeah, I do think you take the gift of the trading gods. I mean, you're up against target number one, which was 850. You got current momentum, and so, to answer the question hypothetically here, Tim, what I would do is I would look to scale out, come into these intraday levels. It does look like 850 makes some sense, and I put a stop loss under 850 on the rest, ride the momentum train. If you want to be very, very tight against that stop, you do have an intraday support level right there, 658 as well.
Appreciate you answering that question. All right, let's go.
But you're definitely look to lock in the profit before earnings. And again, remember what I said on the Tesla breakout at 800. This is all before earnings. Tight trade, very aggressive, all before earnings.
All in front of earnings. And now we've got that right in front of us. So aggressive management makes sense to me, either through a stop loss or scaling or something like that. Gotcha. All right, let's move into discretionary areas of the market. Our top rated sectors in the market are in energy and financials. They've had huge moves, nice runs. Goldman Sachs actually reported on Friday, had a great report that propelled financials even further. Matt, what are you seeing in these sectors though? What should we be paying attention to? What stands out to you?
Well, I mean, two of our highest, well, not two of our two highest rated sectors so far at Tackle Trading 1 week into earnings season are finance and energy, both ranked right there at 20, but ranked at 20 for different reasons. Number one, the financial companies reported earnings. We got through that. The price response was fairly positive. You got to like a lot of what the financial companies had to say last week, so a nice little breakout. But the upgrade over the last couple weeks as the sector was starting to solidify itself, and then the continuation and the follow through post earnings last week, I think, solidified that 20 ranking there in finance. Once again, got some regional banks to concern yourself with this week, and the stock to keep an eye on. There's a lot of momentum happening, but the recent performance of Goldman Sachs on its earnings numbers and the breakout against a reversal formation, reclaiming the 50-day moving average, continuation type trigger here earlier today with some momentum going into 420. Wouldn't target anything above 420, but 420 does. Now 420 would be T1. Obviously, anything above 420 is a lot of momentum, because 420 is literally the high price. Like that is a breakout type scenario. So keep an eye on 420 on Goldman Sachs here from a financial perspective. When you're talking about the energy components here, there's not going to be a lot of great trading happening in the energy space. There's been a lot of love that has been occurring in the energy space, though. Again, I do think if you're within your tight window of 10 trading days, you see a trade in energy, you take the trade. A lot of momentum here, and even aggressive swing traders. You give an aggressive swing trader 3, 4, 5 days on a good trigger. Yeah, that's fine too. But that's for aggressive swing traders that have done it a few times in earnings season. But for the most part, you do have a lot of earnings coming up in 2 weeks from now. And so it's kind of a little bit of a navigation there. One to keep an eye on, COP here. COP, ConocoPhillips, it has been a leader in its space. It's kind of been a front runner to a certain extent, and you're looking at a continuation trigger against a flag-based pattern there. Keep an eye on that. Do have earnings coming up on the 2nd, but again, that's your window there. You do have a little bit of window, but outside of that, it's really about navigation at these top end of the trends within the energy space. And energy didn't get an upgrade for us last week. And not because we don't love the sector. I mean, we've been all over this sector. It's more because it's simply a continuation of the current momentum, a continuation of the current trend. We're not seeing any additional momentum here. And because of that, I felt like the 20 ranking was a very good ranking for the energy space right now, given the fact that there's been a lot of growth over the course of the last few weeks. So let's see how the energy space navigates that 57.5 handle. You're fighting a breakout, but again, look at the market. Doji, a little bit of an underperformer here in the energy space from a technical perspective more than anything else, but you do keep an eye on that 57.5 level. And then when you're looking at the other two sectors from a sector perspective, let's talk about industrials very quickly. Nice W formation here. You got to love that W formation happening right on that 200-day moving average. Confirmation last week as well, and so that got a nice little upgrade into bullish territory. Once again, when you're in the reversal, you're going to be some degree of 40 to 50 depending on where you're at in the reversal. You start solidifying yourself right here with an increasing in support that sees the first upgrade. You then see the breakout, and that upgrade last week was a 10-point upgrade in materials, if you don't remember. And then you see that go back up into the bullish territory, another 10-point upgrade for basic materials. And so the reversal came fairly quick over the last 2 weeks in materials. And a lot of that is because we're starting to see some some areas of basic materials solidify themselves. Let's take a quick peek at GDX here, representing all of the miners out there. Obviously, V-shaped recovery, looking 30, didn't hold initially, but the backstop of the 200-day moving average certainly did. You got to love GDX reclaiming all the moving averages. You know, Tim, you were talking last week about Newmont Mining. And I believe Newmont Mining was one of your picks in Trade Masters.
It was.
Right?
It was
Hey, guess what? That's right here, guys. Look at that nice little flag-based pattern. Hasn't been above the 50-day moving average, but it did last Thursday. Tim, that's what you on Trade Masters did. You got Newmont Mining above the 50-day moving average.
Was that team tackle right there?
I think that's how it works. Newmont Mining solidifying itself, but again, tight earnings coming up around the corner. Barrick Gold here, finding a little bit of reversal analysis. Hasn't performed as well as Newmont Mining, but neither one of the big dogs is performing as much as some of the micro cap, mid-level cap stocks in the mining community that do make up GDX. So you're seeing some momentum from a bullish perspective that is more than in recent history. It is more than in recent history. There's a reason we like the 30, but when you're seeing the momentum in recent history, look at this come in, 50-day moving average down. Look at the momentum here, 50-day moving average down. Look at the momentum here. Trade Masters, Tim Justice. I like Newmont Mining. Breakout. You got to love that. Look at the kiss at 32. So you got to like GDX solidifying itself. But it's not just GDX. Some of the other, look at what's the still ETF? SKL. No, SLK.
Let me look it up.
Oh, what is the still? I want to say it's SLK.
STK?
No, it's not STK. Anyways,
SLX.
SLX. Thank you. Look at still here. Now, obviously, when you talk about the S&P 500, here's old Nucor. Look at that. Earnings coming out. Look at the reversal on Nucor. Well, we're seeing the same thing from a sector perspective. Look at the reversal analysis, reclaiming the 200-day moving average. Tighten this window up, Tim. Look at the 9. Look at the 9. Look at the 9.
Very nice.
I want to show you that smiley face.
It's curling right there.
Look at that smiley face. You see that?
Turn that frown upside down.
Turn that frown upside down, young man.
That's right.
Look at that. Look at that frown. Now it's a smile. We're in buyer's mode there. Can still, open question, can still on the backs of a Nucor report confirm that reversal? I think that's interesting to keep an eye on as well. Stock to watch, though, for me, though, is the top of the market. The bottom of the market in materials, and I've been making this argument in the halftime report, the bottom of the market in materials is starting to stabilize a little bit, and I do think that's a positive. The question I've had, though, is it going to be is Mosaic going to come down? It's been the strength, right? The agriculture companies have been the strength of basic materials. They're the reason it's held up even to even some extent with the volatility. You like the stabilization argument that's happening in steel. You like the stabilization argument that's happening in gold. You like the current momentum that's happening in some of the other metals out there as well. Can Mosaic, though, Can it continue to show some leadership here? Can it continue this current momentum? I got this as a high base, right? I got this as a high base with very similar momentum. I like that from a trader's perspective. Look at the last time, got slightly overextended. Look at the breakout there. Consistent price action follows, gets overextended. What happens? Consolidation. Look at the 9 EMA catch up. 9 EMA is catching up. I like a breakout here of 42 on Mosaic. It was actually my technical setup of the week in the rapid fire. So the question I have, and I still have it, but again, you got to love the technical analysis that's kind of solidifying itself. That's a stock to keep an eye on in the basic material space this week. So that would be the cyclical sectors.
I do like that Mosaic chart quite a bit. And by the way, you asked the question, if people are loving rapid fire. We got a lot of immediate yes, rapid fire. So I think it's a hit, Matt. We've got a lot of good feedback.
I love rapid fire.
It's cool.
Rapid fire is something we've been doing with each other for a very long time. In fact, it's one of the things I used to do to train my eye to overcome kind of micro analyzing every single data point. And so what we used to do way back in the day is, Tim, myself, Noah, Gino, many of us old time coaches, we used to rapid fire chart after chart after chart after chart after chart after chart after chart. And we just have to give you a quick take analysis, right? Quick take analysis, because once you've trained your eye tells you the story far more than anything else, and then your brain takes a moment to comprehend things. And so we'd like to analyze without thought, read the trend, read the pattern, read support resistance. And then we started doing it in the coaches show for a very, very long time, where the last 10 minutes of the coaches show, we'd have a little contest. Who can analyze the most stocks accurate, and keyword, accurately, keyword, who can analyze the most stocks accurately within a 10-minute period? I do believe I did set the record. Thank you very much. Listen.
There might have been some.
There might have been some cheating.
Yeah, there might have.
There might have been a lot of cheating there. And again, I want to be very crystal clear on something. Keyword, accurately. The number's 30. The number's 30. So we brought back rapid fire in the newsletter a few weeks ago, and basically, we put out our stock report, we put out our options report, but I want to get the coaches' take on what their favorite technical setup coming into the week is. And we have a lot of fun with it. So if you haven't had the chance to check out Rapid Fire in the newsletter, it is one of the new things we are doing in the Tackle Trading newsletter, where we rank all of the different sectors on a weekly basis. And you can see that right here. As I scroll down.
There's so much good stuff in these newsletters.
A lot of good stuff.
Yeah.
So you see the rankings there. You see the arrows. Those signify big upgrades, downgrades. 2 arrows, 5-point upgrade. 2 arrows, 5-point downgrade. 4 arrows, 10-point upgrade. Tackle newsletter, rapid fire, though, right there. Love it.
Yep.
Yeah.
It's a fun addition. We do it every week.
What I really like is looking at the coaches' responses to rapid fire, but that's a different conversation.
We'll have that one another time. Yeah. All right, defensive sectors last year, Matt. Then I do want to talk about Bitcoin. There's a couple of companies in the news I want to have a few discussions about as well.
I can do defensive real fast.
Let's do it. Let's do rapid fire.
Rapid fire. Well, let's start with healthcare. I already spent quite a bit of time talking about healthcare today when I was talking about the from an earnings perspective. Rankings we kept at 45. It's in reversal characteristics. It does have slowing momentum. Kept the handle right there at 45. I think getting through this earnings season, this earnings week from a healthcare perspective, I think it's important to see the price response following some very important earnings. So 45 handle right there. Right side of 50, right? Right side of 50, you're still got a bullish lean, but a 45 ranking is a neutral ranking at Tackle Trading for the healthcare space, and the price action certainly does fit that from a multiple time frame perspective. Number one chart to keep an eye on, though, after we navigate earnings is this weekly chart. That's why I think the price response to earnings is so important regarding the healthcare space. Let's talk a little bit about consumer staples. This sector is a bunch of really boring stuff.
There's not much going on in the staples sector. I'm going to tell you that right now.
There's a lot
you
of
dig into
stuff.
Every company. There's not a lot of charts that are tradable. For certain.
That's rapid fire. Keep an eye on 70. Keep an eye on the high for last Friday. That would be a continuation, but I just don't see a lot in this space. Procter & Gamble reports this week. Philip Morris also reports this week. But outside of that, this is just, it's consumer staples. What are you going to say from an active trader's perspective? And then when you're taking a look at real estate XLRE, Crown Castle, important real estate company to report this week. Interesting reversal characteristics happening. The 44 handle certainly has played a role here. It played a role last time as well. Now you're fighting up against that 50-day moving average. Has a positive 40 ranking. Typically, not all the time, depending on if it's getting upgraded versus downgrade. But when you get upgraded into a positive 40 handle, it's a lot of it's based on reversals. A lot of it's based on confirmation of reversals. But a 40 positive ranking following some type of upgrade, whether it was last week, the week before, that looks like some degree of preparatory type breakout scenario. And that's what I see here. And I think that's what a lot of the market participants see here on real estate. Whether they're waiting for Crown Castle, I have my doubts. I think they're waiting on a breakout of the 50-day moving average in real estate. I do think you got to respect the price action over the last week, though. Holding north of 44 positive, breaking out of the 20-day moving average positive, coming into the 50-day moving average and showing some weakness. Again, I think is positive because those are all very consistent technical scenarios that it's navigating right now. But again, when you're dealing with reversal analysis, you got to fight through some chop. And as you fight through that chop, that's where the opportunity certainly does live. So let's keep an eye on that 50-day moving average, which can be continuation. Utilities got a 5-point upgrade just simply because of slowing momentum and a double bottom at 64, but you're still within reversal. Nextera is the NEE is the company reporting earnings this week, but not a lot to take a look at here in the utility space, Tim. And that is the defensive sectors.
Very good. Appreciate the analysis each and every Monday. You always go through these sectors one at a time, and it really helps us set up the week. So appreciate that, Coach Matt. Let's take a quick peek at Bitcoin. Crude, gold, you've already kind of talked about a little bit here. If you want to highlight anything in crude, you can go ahead right ahead. I didn't really see anything in the chart. Gold, we already looked at. We're good.
Same analysis on both of them.
But Bitcoin here is an interesting chart pattern, in my personal opinion. I think you got the potential for it to test its highs here, Matt. The sentiment has been strong. The breakout was incredible on Friday, held that throughout the entire weekend. And tomorrow, we may get our first Bitcoin ETF. Now, there's some nuances to this, and there's some real important details to this. The ETF is going to be traded under ProShares, which is a very popular, big firm. They issue a lot of ETFs out there. BITO will be the symbol. There are 4 other companies that are right on the backs of this that over the next 30 days, 45 days, will probably go out there and issue their Bitcoin ETFs as well. But Matt, it's tied to the futures market. So you're not getting direct exposure to Bitcoin. Are you interested in this? Do you think this has some market moving juice to it from a crypto perspective? Or do you think this is just another one of those, well, yeah, sure, you gave us a futures ETF, but it's not really the ETF? What do you think?
Oh, how should we rank our excitement level? Like what would be the comparison against? Like if you were just to give me, hey, Matt, how excited are you? I'd be like, I don't know.
Do you think this has...
Am I comparing this against when I had my first child? I was very excited. What am I comparing this against?
I guess, well, that's an interesting question. That's an interesting clarifying question.
I know a comparison.
Okay.
How excited would I have been in 2015 for this?
Okay. That's a good one.
In comparison, I'm not getting up tomorrow for it.
I don't really care about it that much either. I think it's interesting. I do think it's interesting, and it's a good step.
Yeah. Thanks, SEC, for giving us a Bitcoin futures ProShares tied to the futures market. Thank you. I appreciate our overlords who get to make those decisions for us. I really do. Unfortunately, we have lots of proxies. Yeah. So in 2015, 2016, 2017, 2018, when the futures when Bitcoin was inserted into the futures, yeah, I would have been extremely excited because the only way you could get access to Bitcoin is if you were, in Coinbase as an investor or one of the Bitcoin exchanges. And so I would have been extremely excited. But after the futures were injected, and futures trading Bitcoin is not great, right? That's why there's a lot of proxies for Bitcoin. Coach Mark, who is unfortunately not here today taking care of his daughter, but he could give you a list of 14 proxies he loves for Bitcoin, right?
Sure. Mara, Coinbase, you
Mara,
name it.
Coinbase,
Mhm.
now we have Coinbase. Coinbase, I feel like Coinbase can be a wonderful proxy for Bitcoin. And you're seeing Coinbase go from 225 to 300 in this recent Bitcoin move as well, threatening an amazing breakout at 300 with an earnings report coming at somewhere in mid-November. So a lot of momentum happening there. So again, if you compare it when we didn't have proxies, when we didn't have the futures market, when every financial institution wasn't trying to get their gravy train of fees called pro shares and so on
Mhm.
and mutual funds and so on and so forth. Yeah, fine. I'm not excited for Wall Street cashing in billions in fees on these ETFs. I'm not
And,
excited for that.
and I'm glad you mentioned fees. I really believe you could be looking at 5% fees on this one when you really dig into the
It's
underlying cost of
so
carrying the
BS.
futures
It's
contract and
so
all that kind of stuff.
BS.
They are going to charge for you to
Yeah,
maintain a position there.
yeah. So a 30-year-old money manager and his 55-year-old boss can get both paid massive bonuses. It's ridiculous. There's too many directed market products that you can tie yourself if
Mhm.
you want access to Bitcoin. And so to answer your question, I've changed my mind. I'm not excited at all.
Yeah, I don't know if it's a news story either. I mean, obviously it's
It,
news
it is
because it's
because
the
every
first
financial
Bitcoin.
site has it and it's the first one. But again, it's tied to futures. That's going to have some nuances. I'd like to see the fee structure within it. And I'm not talking about the management fee Wall Street.
No,
You know damn well you have your hidden six other
that's right.
categorizations of fees. I'd
Cost of
like to,
carry and all that stuff.
yeah.
Yes.
Wouldn't it be amazing if Wall Street had to be transparent 100% with their fees?
We're gonna
Like,
open a
wouldn't that
can.
be amazing? Wouldn't that be truly, truly amazing if Wall Street had to tell you exactly how much they did charge you out of your account?
People
That would
wouldn't
be beautiful.
people wouldn't believe it.
Oh, well, you can thank Bill Clinton for killing Glass-Steagall.
Yeah, yeah. Financial transparency would be a wonderful thing. We'll see what happens with this one. I do think the fees are going to be pretty high when you really dig into it on this one, because
Yeah.
to be able to carry futures contracts and all that kind of stuff, it is what it is.
Whatever nonsense they say to justify carrying the risk.
That's right. That's exactly right. All right, let's move into stock talk here. There's just a
Yeah.
couple stories that I did want to cover here today. Did any of the
Sorry,
earnings?
sorry, Tackle. Wall Street fees get my blood pressure moving up.
They're going to get my blood pressure
I
moving up
might
too.
have to go look into that drug Coach Greg gave us the joke in rapid fire
Lipid-
regarding, was it Lipitor?
I think so.
Yeah,
There's
I
a
might
blood
go look at
pressure
that.
medication.
Wall
I don't want
Street
to
fees.
quote the wrong
What
one.
causes Matt's heart attack in 2048? Wall Street
Um,
fees. Wall Street
transit.
fees.
Well, they'll keep saying that inflation's transitory, and you'll find
That's a good one.
25 years from now. All right. Any of the earnings grab your attention today, Matt? Did you care about them?
No,
Albertsons? I didn't.
not today.
Nothing really grabbed me either.
Not for this purposes, no.
One story did grab my attention though. Zillow. You were talking to me about it this morning. I dug into it a little bit. If you can give me Z, stock gap down here today after they suspended a program that they have with their company, Matt, where they buy real estate directly from their customers. The sellers can have Zillow pick up the house. They've done this like 3,800 homes just in the second quarter alone. So it was a very popular program. They had to suspend it for the rest of the year, saying there's too much demand for it. They were going to reassess it next year and bring it back.
I think that also too much demand for Zillow means too much supply for the consumer.
That's right.
I just want to make sure that's clear.
Yeah, that's exactly right. And by the way, the gap down here is interesting. It now sits on support. You've got earnings coming up. This was a bear, kind of stock there for a while, Matt. Is there anything to watch here?
Yeah, that's what I'm upset about. Zillow had a fantastic potential reversal formation happening. It's been a very consistent downtrend, a prolonged downtrend in Zillow. It had an opportunity getting above its 50-day moving average for the first time since June. And that was on the backs of some pretty decent slowing momentum, head and shoulders reversal characteristics. But again, this is the variables of trading coming out live in front of us with Zillow coming out with the negative news story. And that obviously the The kryptonite. I was debating Superman versus literally every other superhero with my 12-year-old last night for seemingly 3 consecutive hours. She doesn't understand Superman is like just playing on he's just playing a different game.
Dude, some of those Marvel superheroes, you'll lose that argument. I've had that argument. You'll lose.
I just want to make sure that my daughter understands Iron Man would not be Superman.
No, that one,
this is not happening, honey.
Nor
this
Batman.
Is not happening. But
you guys even throw in their Deadpool? I mean,
not happening. Not beating Superman. No. Mm-hmm. But I don't even know what my point was now.
I don't know what the kryptonite was here for Zillow. Was it something along kryptonite? I think that's where you were going.
No,
maybe this home buying program was
the Deadpool. The Deadpool. The Deadpool comic got me off.
All right. Well, gap down now. Obviously.
Anyways, I know my thought. Thank you for that, Tim. Variables, uncertainty. Mm-hmm. Uncertainty or we wrap that just up into volatility, but volatility is the kryptonite towards technical analysis. And again, you're seeing that play out here in Zillow. Again, though, if 85 holds here, that could set up in the short term, but not in front of earnings. And that's the problem. Yeah. This is now going to be a reversal waiting on earnings. So it's a stay away till post earnings at this point.
Gotcha. All right. Just 2 more then. For me, Apple Computer, they're doing a launch event today, highlighting new products. Probably the MacBook Pro is the anticipation.
Mac.
We saw technology get a little bit of an upgrade. Apple has earnings next week. This chart is also developing nicely as well. Matt, anything?
It is developing nicely. But again, any development is just going to, anything I say, because investors love Apple. That's not going to change. Anything I say is going to get blasted for earnings.
Yeah, I agree. All right. Disney, last one here. Disney got a downgrade, citing their Disney Plus subscription numbers.
I want to call BS on this one. Okay. Give the news. Give the news to everybody.
Barclays downgraded the stock to equal weight from overweight, citing concerns about their
growth. Hold on. Now where the real truth comes in. Okay, because you're going to say a bunch of nonsense.
Yeah, about the Disney Plus subscription numbers.
No. You're going to say a bunch of nonsense. Okay, what Barclays really cited, because we need to create a segment where Matt says what Wall Street really thinks. Okay, that old key and pill Obama. That's what Barclays really meant to say was, we saw a CNBC headline that Squid Game is accounting for $900 million in Netflix, and we don't see anything that can do that for Disney. So we're going to put Netflix above Disney, and it has nothing to do with Disney.
Yeah, I think that's exactly what did happen here today.
They looked at the CNBC. They did. Yeah. They saw Squid Game. They're like, Squid Game worth $900 million? Yeah, based on what? I don't know. Netflix didn't tell us, but it's worth $900 million. That's not something Disney can do. That's what Wall Street saw today.
By the way, the Netflix thing.
Until Mandalorian comes out.
They're using a phrase called impact value to measure that $900 million, by the way, Matt. Impact value. I know I could get you triggered on this one, so I'm not going to go down this.
I got a question for Matt. We're both.
If it's subjective, I'm throwing my headset.
Okay, well, here we go. You and I have both invested a lot of money in Disney costumes for our children. What costume do you think will dominate this Halloween? The Disney costumes or the Squid Game?
Ooh, for kids?
Is this a value question?
And parents.
Like, is this a Peter Lynch value question? When he was walking through the strip malls in the 1980s, was he wondering who?
Hey, those supervisor with the triangle the jumpsuit outfit, Squid Game, they're $60. So,
I get it. That's fine. Halloween costumes. Come on, Disney princess. They're like Jedi Knights out there. I'm still going Disney. Disney dominates.
Definitely has.
Disney dominates.
I'm never the first person to wear a costume when it's in style or trending, Gino. So I'm probably going to be wearing whatever my wife gets me and reluctantly going out and knocking doors with my kids on Halloween. So
I'm going to wear a costume called a happy NFL fan. I'm going to rock an Arizona Cardinal hat. That's what I'm going to do.
I was going to say, not the Dolphins. No, you can't
I said a happy NFL fan.
That's right.
I said a happy.
All right. That's it, guys. Gino, by the way, welcome out. Gino, great to hear from you. Gino, do you want to do Gino's gems today?
Yes,
we did one. You got a good one?
Yeah. Yeah.
All right, Gino, let's see it. Let's go into Gino's gems. We've been doing this each and every Monday, by the way. Coach Gino is a veteran coach at Tackle Trading. He's been around the markets for about 25 years. And I would say one thing about Gino is he's got a lot of tricks. He's got a lot of tools he uses. He highlighted position sizing tool last week on our watch list. Gino, what you got for us today for Gino's gems?
Yes. Last week, real quick recap, and we're going to continue with that. We had a position sizing tool, and we even talked about it on the Cash Flow Club and really detailed it. So 1 second, real quick.
Who still has a dial-up phone these days? I haven't had a phone in my house in probably 10, 15 years. Always.
Yeah, I didn't know they margin call this time of day, but anyway.
Welcome back, Gino. Welcome back.
So anyway, I didn't even know I had a hard line too. So anyway, looking at this position sizing here, last week, it was very basic. It's on our website. It's called TradeView. It's impacted inside of our newsletter here and our stock reports, option reports, what have you. But basically, Tim, just a real quick 2-second recap. You throw it on here and it tells you how many shares to buy based on your risk. You come in here and you say, well, I've got a $10,000 account, 2% risk per trade, and it puts the shares. So based on this random one I put here, XLF, here's your trigger in, here's your stop. It tells you 160 shares. If I stretch it out down here, it tells me 81 shares. Great. So it makes math easy. It makes life fast. It makes everything easy. Got a lot of good response from the students saying, oh, I didn't know I could do that. And also it takes away the excuse that, well, position sizing is too hard. I just don't get it. No, it's the most important thing. You can't have any excuses for it. It is your first line of defense. So I'm going to take this a step further because the question was, well, what do I do about options? How many contracts? What if I'm doing a bull call spread? What if I'm doing a butterfly, right? I mean, this doesn't help me. This is stock. So if you go to our site, and I don't know if you guys have seen this or not, this is really awesome, is our trade journals. Under Trade Center here, trade journals, you could come in here and download them. And this is a special membership and premium service here for our trade journals. We talk about these all the time. And once you download it, this is what it looks like. And by the way, guys, this is gold when you look at this. You look at the trade journal, this is what you're actually thinking about, right? I've logged in a whole bunch of trades here from my student trades and stuff that we do. But when a coach, so somebody like Matt and Tim get a hold of a trade journal like this, we can analyze this in about 15 minutes and tell you exactly where your strengths and weaknesses are and really dial in your trading. So they are an investment in yourself, these trade journals. But what I want to talk about is that position sizing question. Down here to the bottom right, see this red button? You left click that. And let me circle so you guys can see it right there, right? You left click that and it brings up the position sizing calculator. Now to make the lesson faster, I already typed in the same thing as the other chart here. Here's the XLF here. You put in long or short, right? And here's my entry. Here's the stop loss. And what it does when you type in just this part right here, your entry and stop loss, it tells you how far away your stop loss is, which you can do that in your head, but why, right? And then it tells you how many shares. Now, based on that, it's calculating how many shares to do on your risk right here. What I like about this, Tim, is it's real easy to click on here and change your risk amount, and especially when we're doing a class or you're managing multiple accounts, I could change that number real quickly on the fly. Then it tells you the cost and the cost if you have a margin account, because most traders use margin, unless you're on an IRA or something. So this is important too, so you know how much money you're putting in that trade. Here comes the option stuff that we were talking about, where the question came in, is the call or put. What strike you buying? Now, that's not really that critical that you put that in there. The most critical thing is, and it only takes a second, is you put in the delta. So if I buy a call with a delta of 60, this is the Greek that we decide on which, and you don't have to put the price in there, but it'll calculate it if you do. It'll tell me my risk based on this stop loss is $75 a contract. And because of that, I could do 2 contracts. Let me highlight that a little better with a different color. 2 contracts. You see that? So now I know I could do 2 contracts or 160 shares. So this way, I can position size using options correctly and stay under my risk parameter. Now, real quickly, what if your delta is not 60? What if it's, I don't know, 63, or let's say 55? I put 55 in there and boom, still 2 contracts. So it makes life easy, right? Then the question came in, okay, here's the hack part of it, Tim. I just grabbed all these entry and stop. I just dragged this down, you know what I mean, to make it easy. It's just an Excel spreadsheet. I just went like this and dragged it down because this is all the same. The entry and exit's all the same here. But what if I said, okay, I want to do an out of the money option. So I'm going to put out of the money option. Let's say it's a delta of 30. Here's the hack part of it. Whatever your strategy is, you just put the delta in there. Based on that, I don't need the option price. I just need to know how many contracts. That's 37.50 risk, and it's 5 contracts. Okay, well, wait a minute. What if I'm doing a spread? What if I do a vertical? I'm going to put vertical in here. Now, based on our rules, we like a net delta. So I'm going to use net delta of 25. Well, based on net delta 25, I just grab this little tab down and guess how many contracts? That's 31.25 risk. I can do 6 contracts. So no matter what strategy it is, all you really need is, in fact, I'll just put a made up strategy here. I'm just going to put question marks. I'm going to say, you know what? It's some kind of weird debit condor, open wing, whatever. And it's got a delta of 15. Based on that delta, my risk per contract is $18 and the contracts are 10. So that didn't take me that long. So there's no excuse not to position size correctly. And then here's the fun part of it, Tim. Let's say you and I are talking about this trade. You might do a certain one of these strategies. I might just buy a long call. But I say, okay, Tim, what's your risk per trade? In fact, give me a risk per trade, Tim. What do you think? Not 200.
Let's say 400.
Okay, so 400. I type in 400 there. And when I click this, boom, automatic, there's your contracts. That's how many contracts you would do. And let's say another person's like, well, I only want to $125. Now check this out. That's not a lot of risk. 120, 1 contract, 3 contracts, 4. So all the deltas are in here. So final little advanced hack. Really all you have to do is put your deltas in here that you'd possibly use and put different numbers in here, $1, $2, $3, $4. And by the time it fills it up, all you have to do is switch your risk up here, and it doesn't matter the strategy and how far your stop is. Your playbook is done. Your playbook is done because you know exactly right here how many contracts to do on the options. And by the way, I had no math. I did 0 math on that. It's all calculated in there. That right there, Tim, is one of the most valuable things in our journals. But check this out. After you've done, ready for this? If you do it correctly and you're consistent, after you've done about this many trades on your journal, you probably won't be going back to position sizing because you'll remember it. You'll know, hey, with my stop loss $1.25 away on out of money call, I do 3 contracts. You know, on a 55 delta, only 1. You'll start remembering. It becomes a pattern. But this is one of the biggest steps I see students missing in their whole career. That's it, Tim. That's the hack of the week, man.
Gino, I appreciate that. Another gem from Coach Gino there at Tackle Trading. And obviously, position sizing, your first line of defense. I did like the way that you said that, Gino. And I really think it's a simple thing. If you're out there and you're a pro member, get the journals. You should be using them. Make sure that you go through them, go through the tutorials and the videos and whatnot, and start using those journals, not just to journal each of your individual trades, but position sizing rules. Also on the Theta research spreadsheet that Coach Matt highlighted last week, that's a great way for you to evaluate different trade setups. So love the journals, Gino. Thank you for the gem again. And that is going to be our show here on a Monday, 10/18/2021. Couple final thoughts, Matt, for the team out there.
Tackle onboarding with Coach Frank here tonight. If you want to get to know Tackle Trading's weekly schedule, our webinar schedule, our pro offerings, you know, how to navigate the website when we release certain reports, stuff like that. That's always on Monday night, but outside of that, you know, check out the scouting reports, the newsletter. The Trading Justice podcast will be released later on this evening as well for your listening pleasure for the week as well. So a lot going on this week at Tackle Trading, but as always, we'll be here each and every day in the Tackle Trading halftime report here on YouTube. And if you are not a subscriber to Tackle Trading's YouTube channel, make sure to hit that subscribe and like button and help us march to that 20K level.
We're going to get there this week. I believe. So be that 20,000 subscriber, be that person to knock it past that breakout channel. We would love to have you as a part of our community here. All right, guys, we're out for today. We'll see you guys tomorrow.